free to reach out to any one of our account managers.
Thank you, Jeff. So quick word on CareStack. While Darby is certainly a brand name because they've been in business over 70 years, CareStack, I'm sure, is probably not very familiar to many of the attendees today. So real quick, this is a picture of our headquarters outside of Celebration, Florida. CareStack is an all-in-one cloud-based solution for the complete management of the dental practice. And we typically work with two types of clients. The first is the dental practice that's concerned about what does reopening look like? I want to use technology to make it a contactless experience, and they just need some help to get there, and that's what they're looking for. The second type of clients, while they're visionaries and ambitious, they've grown frustrated by managing many different subscriptions to run the dental practice. For example, one for claims, another one for analytics, another one for reminders, another one for a portal, another one for teledentistry. The list goes on, and they're really fatigued and frustrated by managing all these different subscriptions that stack up. So hopefully, if you're listening today, you fit into one of those two buckets. Please visit us at carestack.com and request a demo. And so I promise everyone on this call, that's the last commercial you're going to hear. I'm now going to turn it over to Mike White, who's going to be our host today. But I really want to thank Darby, Mike White, Eddie Geraghty for coming together and really having an update on this topic. It's extremely timely now that funds are being released and practices are reopening. So Eddie and Mike, please take the floor. Thank you very much.
Yeah, and thank you both, Darby and CareStack, for putting this on and having us on again. I know we had a great attendance this last time, and we were able to provide some great insight. It's amazing how quickly everything is coming together and how quickly things are advancing through the process. I know we were just chatting before we went live and broadcast of some of the states, including where we are today, of starting to see the practices reopening and having those conversations of what does that look like. And I know we'll touch on that a little bit more on the Friday session when we chat through what does reopening look like, what do we need to be doing now, and through that. But definitely appreciate everybody's conversation. And really when we all came together and started chatting what matters the most today, we came up with money matters, cash preservation, and certainly trying to put some PPP funds and certainly as questions are already starting to come in, which is great. We're seeing those questions still around the PPP funds, whether we've received the money, we don't know what to do with it now, how do we track the forgiveness, and then certainly some of the compliance things that have come out or, and starting to think through. And so we'll share some things that are have been passed, have been quietly passed, and certainly things that we need to work through and think through. But as we cover through the agenda, and as Jim mentioned and Jeff mentioned, we want this to be a fluid conversation, so keep the questions coming. We will address the questions as we feel they're relevant to the respective slides, or when we have a pause in the moment. We'll also have some Q&A towards the end if you want, but we have no problem kind of stopping midstream within the presentation, because this is all about helping each and every one of you and utilizing the time we have to answer your questions as best we can. So as we get through this agenda, Eddie and I are going to split and chat about recap of where are we now. It's so important to just have a quick reminder, since there's been 3, 4 really big tax altering and government issuing changes that have been made, not just the PPP and EIDL money that has come out, but also tax law changes and things like that that are relevant to your discussion. But getting past the ADA, but where are we now? Chatting a little bit about cash flow impact. Certainly, again, money matters, cash flow preservation, all that good stuff. And then we're also going to chat about recapture plan and start building towards that Friday presentation we're going to have in this 3-part series, the first of 3-part series, if you will. So, and then we'll end with things to consider when we reopen the practice, and we'll build that into Friday as well. So we'll have some Q&A and all that good stuff. So with that, I'm going to hand it back over to Eddie, let him introduce himself. Oh, let me introduce myself again. Apologies. Mike White with CLA, one of the principals, along with Eddie. He and I have been partners together for almost 9 years, working in the DSO, the single location and DSO space, covering the nation, helping business and entrepreneurs run their practices on a day-to-day basis. Our core strategy, tax, accounting, and advisory, really what has gotten us known for, at least our dashboards and analytics software and all that good stuff. But as we've partnered into this industry and become known as some thought leaders, Eddie and I have really enjoyed working with the business owners in this industry. So excited to be here, and I'll let Eddie introduce himself before we go from there. Thanks.
Hey, my name's Eddie Geraghty. I'm a CLA principal with CLA, as Mike said. I've been with Mike. Over 8 years now. We work quite a lot with both small and large dental organizations, and I specialize mainly in the kind of biz ops, CFO outsourcing with a touch of tax planning and tax strategy as well. And so I'll speak somewhat to some of the tax things that have came up in the last I guess 6 weeks now. This crisis is it's started to lengthen out into the period. So if I'll take it from there, as regards a recap of discussions that we had already a few weeks ago. One of the big things that came out with COVID-19, one of the first acts was this family leave assistance program, whereby if companies were affected directly by COVID-19, be it having to stay at home with kids, or actually the illness or lockdown, whatever, there is the ability, the companies are obliged to pay compensation to the employees up to that maximum of $511 and $200, and then it's basically refunded back from the government through a payroll credit system. Again, that was great at the time. I guess to a certain extent, that has been overlapped, I suppose, by the whole paycheck protection program, which came into being thereafter, which we'll speak about later. Then other things that happened in the taxes, obviously, to push the tax deadlines out to July 15th from April 15th. Quite a lot of the states have followed, I think all of them at this point. Some counties as well on the property tax side there's various deadlines, so get with your CPA to discuss any of those in case there's anything coming up this month. I think Texas pushed out the franchise tax deadline another month, so it's not an issue for another month again. So that's another one. Then one of the other major ones that came in was the deferral of the employer's share of Social Security. This came out as part of the CARES Act, the ability to take from I think March 27th through to the date of, initially they said that you couldn't couple this with the Paycheck Protection Program, but subsequently they said that it was for any employer's share of Social Security. So that's the 6.2% up to approximately 130,000 on payroll. That piece of your payroll taxes, they're allowing you to defer it for up to 2 years. So 50% is due at the end of 2021 and 50% at the end of 2022. So, but they're now saying that it's from the period of March 27th through to the date of forgiveness of the PPP loan, which at this point could be the tail end of the year. So it's the earlier of the forgiveness date or 12/31. So that could be quite a chunk of change. So you should get with your payroll providers to speak about that. So that was the employer share of the Social Security. There is in addition employee retention credits. There's quite a lot there that has come out, and the whole point of it is to try and protect the liquidity of businesses and trying to get money down to the employees. That's the key thing of everything they're trying to do, is trying to keep the economy alive and trying to keep people going. So,
I think the key thing there also, just to add on that, is, and Eddie referenced a little bit, is a lot of these things that we're going to talk through today and touch on, some of you may already see, and certainly we're still seeing some questions come through, which is great. This will be mainly derived through your payroll provider. So if you haven't had the conversations or haven't chatted with your payroll provider of how they're going to help you execute these credits and track these credits with you, a lot of them are creating reports within the system. A lot of them are, providing those reports. Certainly as it came into the PPP, we noticed that we had to utilize the payroll reports that they provided to get there. In communication, and the message of today is a lot of it's going to be communication with your vendor partners, communication with your payroll providers and bankers, of course, and of course CPAs as we go through that. But next slide, Eddie.
Hey, Eddie and Mike, we do have a couple hands up. I mean, how do you guys want to address this?
Yeah.
Would you like to take a couple questions now?
No, okay, absolutely. So go for it. And we'll go to Q&A after that. I know there's few.
Yeah, you're going to have to, Mike, as the host, you're going to have to, like, for example, Alan or Mary, you're going to have to go up to their name and just allow them to talk. And then the individual who Mike has opened up your line, you've got to unmute yourself as well.
All right, so bear with me, folks, as I work through this. Apologies. So Mary, allow to talk. So you'll have to unmute yourself, Mary, and ask away.
All right, she must have not unmuted herself. So Mary, if you can hear us, you've got to unmute your line on the Zoom panel so you can ask your question. I think it's a security feature that, yeah, it automatically puts them mute. All right,
Yeah,
well,
no worries.
let's
So
proceed
we'll come
then.
back to that. So
Yeah.
well, Mary, when you can, I have you on as much as I can on this side. I can do everything, but I will stop. You know, some of the questions that have already come through are all PPP related. Give us a minute. We'll come back to those, and definitely make sure that we have that ability, if you will, and we'll get address those shortly. All right. So Eddie, if you want to keep on rolling, go ahead.
Yeah, I'll quickly breeze through some of the others. So out of the CARES Act, obviously the big news story was the PPP program, which we'll speak to, but there was quite a lot on the tax side of things as well. So just following on from the last slide, one of the big things was if there was net operating losses, and they've backdated this. So this is kind of going back to somewhat similar to the old rules pre-tax reform. So if you've 20, and the backdated this to 2018. So if you had 2018 net operating losses, prior to this, you would have had to carry them forward and offset them against profits in the future years, and there was actually limitations on how much you could offset as well in any given year. So they've kind of got rid of that for the moment, and they've also allowed you now to go back 5 years. So that could be that if you had a loss in 2018, basically, or indeed 2019, the way things are going this year, you'll be allowed to go back and effectively start in 5 years ago, which would be 2013. And if you had paid significant taxes in those years, you can claim refunds. How quickly those refunds will come through, that's anybody's guess. It's not the fastest thing in the world, but at least it's there in any case. So it's something to think about, and it's a way of creating liquidity, hopefully. Like I said, the warning there is the IRS are notoriously slow to process refunds, particularly for prior years. So I wouldn't be depending on it right now, but it's good to know. There's the suspension of the excess business loss rules. Again, that's where there's basically passive losses against business losses against non-business losses. That was something that came in with tax reform. They've suspended that now. Business interest limitation. This was a big thing for, and again, you will have some practices where there's significant interest because of new startups or acquisition loans or whatever. So there was this whole idea that you were limited on the amount of interest deduction you were allowed to offset against your taxes in any 1 year. And it was one of the limitations was on 30% of your adjusted taxable income. Well, they've extended that now to 50%. So again, it may be an opportunity for some of you out there. Next slide.
Excellent. Mike. Yeah, so next slide, as we kind of chat in, I'm going to shift over to some of these questions that came through on PPP related. And I know many of you, and I actually didn't throw, as I'm scrolling through my slides over here, didn't throw much in the PPP way of details or comparisons relative to EIDL. I thought we would chat through it. So at this time, one of the questions is PPP money. I've received my money. When is the best time to take out the money after the approval? There's actually rules around that. You're given, and the bank will dictate how long you have. It's usually within a week, and typically they will actually just deposit it into your account once it's been formally approved. So I would expect funds in your account within 7 to 10 days of that approval is what we've seen on average. They are not allowing, which I think will go to one of the other questions, they are not allowing you to say, hey, I'm not open yet, push this out 2 weeks. If we recall, the whole purpose of the PPP loan is to get your employees back to work. It isn't that, as much as they say it's a small business loan or grant or however you want to come to that, and we would chat about that in a minute. The whole purpose is for you to hire your employees back now. So they want you to get your employees back on payroll because they're trying to lower the unemployment numbers that are currently out there. And currently trying to limit the unemployment system and all that good stuff for that purpose. So when we start looking through that process, you're going to take the money out, or your bank's going to derive when you're going to take those funds out. One of the other questions was, if I don't use PPP money for loan forgiveness, can I use the employee retention credit? Eddie, do you want to address that? I think you touched on it a little bit, but.
Yeah, so if you don't use the PPP money for loan forgiveness, so you're saying, I guess the question is, can I use the employee retention credit? But the problem is, if you've already got the loan, you've kind of negated the other one. So, and if you've got the loan, surely the point, it's supposed to be used for payroll purposes. So therefore, I would say that that's the better way to go, to basically pay the employees and get the forgiveness on it, rather than a tax credit. It would make sense to me, because you're going to end up having to pay back the PPP money if you don't spend it on the payroll.
Right.
So my answer to that would be use the PPP, because as Mike said there, the PPP is not a grant to the companies, and the media have done a very bad job at explaining it to people, and they've come up with all these flashy headlines. The reality is, any company that gets this money and doesn't pay its people to the extent of at least 75% of that loan amount, they have to pay that back, every single dollar of it. So
yeah, to clarify, so for those who did not get the PPP yet, yes, if you look at and delineate those two, so another question came through on the chat feature. If we delineate the PPP monies and grant monies, in addition to the credits that Eddie referred to, there's two main credits that he referred to, and I'll actually go back a couple slides just to refresh these credits, if you will. If it's going to catch up to me here, apologies. There we go. The initial credit, the $511, is for the if one of your employees tests positive for COVID-19. It's a 10-day, up to $5,110 credit for you to pay that employee while they're on there, assuming they were still employed after April 1st. The other $200 is for the family. If an office was closed, childcare was closed, something along those lines, it's up to 2/3, up to $200 even for 10 weeks on that side. So that credit could be used. As far as the other credits that you're referring to, the employee retention credits, yes, those would be available to you for that person who's asking. Those would be available to you if you did not get the PPP yet. So I believe we answered that. So I have a little itch in my eye. One of the questions came across, already received PPP money, but my state has still a stay-at-home order. I can't open my business. How can I use the PPP money for the next 8 weeks? Again, when we look at the purpose of the PPP money, we have two goals, and this really gets into the biggest cash flow conversation we have. If we have received the money, the intention of the PPP is to bring your employees back to work. If you are making that decision early and often that I'm not going to be able to bring my employees back, it doesn't make sense, or the cash flow of the business will be hindered, and this is going to be a loan, then that effectively is what it becomes. You hold on, your employees don't come back, but you have a loan for all intents and purposes that you need to pay back in 2 years. That's a 1% interest rate. Discussions or bankers have not said one way or another whether you're going to be allowed to refinance that. They haven't issued a program, and I've been trying to keep up with that as much as I possibly can, but at this point there is no refinance program off of that PPP. So it will just be money due that's due in 2 years if you're not bringing the employees back. Now recall, it's 75% of your payroll, FTE count before. One of the new things that came out over the weekend, two big things that came out over the weekend, is the 75% of FTEs before COVID and after your layoff feature, and then up to spending those dollars as well for that purpose. So if we received $100,000, we had 10 people, just using simplest math, we need 7.5 of them to come back, and we want to spend the $100,000 in order to get that max forgiveness on the payroll portion of it. In addition, we can use it for rent, utilities, and interest, but not to exceed 25% of the loan. The big thing that came out over the weekend was if you have a documented case that you offered your employee their job back, we certainly are very well aware that hygienists and certain other office team, I haven't seen it so much on the provider side, but that doesn't mean it's not happening. But typically in a hygiene assistant range and some front desk, they're refusing to come back to the office. Understand that certainly, everybody has their rights and everybody has their ability to be fearful of that, of what's going on. So we can't negate or track negative to that. But if you have offered the job back, you have two responsibilities. One, document it. You will get credit towards your PPP for it. And two, notify the unemployment agency if they're on unemployment that you have offered their job back. And the key to that is they will no longer be charging you for the unemployment rate that you're getting penalized for. One of the questions to build off of this is, if I'm under 50 employees, is this applicable to me? This is for all under 500 employees. So the 50 employee FMLA is not as applicable. However, there is a documented, and we don't know how to do it, but if you look at the Treasury report of saying, if you are under 50 employees and you can document that this is going to hinder your business, then there could be exceptions. They haven't given details of what the exceptions would be. They haven't given the details of who you're documenting that to. So at this point, this looks like it's for everybody under 500. Eddie, anything you want there?
Well, again, I guess the thing, and I don't know, am I confusing things by saying that the PPP, obviously, if you're going down the FMLA route and paying the employees, if you're using the PPP money to do that, well, then you don't get the credits on the other side. So it kind of almost superseded a lot of that. Would you agree, Mike?
Yeah.
Kind of.
I do, yeah.
It was very good at the start, but then once the PPP program came into being, it made a lot more sense for most businesses. So one of the other things, I see some of the questions there, as you, it kind of comes back to the 8-week period and, you know, using the money and paying the employees. Like, to a certain degree, the 8 weeks, it starts from once you get the money, and the point is it's all about the employees. It's actually not really about the work, because if you're closed, those employees aren't getting paid. And the whole point is it's a paycheck protection program. It's effectively unemployment assistance by another name. So that's kind of the thing. It's not a business loan. It's not a business grant. They're using businesses as a conduit to pay people, employees who cannot work because of this crisis. So. Yeah.
So, and I see, and we'll continue to work through some of the PPP questions. I'm trying to work, apologies if I'm taking my eye off. I got a chat feature and Q&A features. So lots of great questions. Please keep them coming. Again, this is
Mike, real quick,
so,
to our audience, please use the Q&A feature versus the chat. It's just a better way for us to manage it and have better follow-up post-call. So please, thank you very much, Mike, for bringing that up.
Yeah, absolutely. So one of the questions, or a couple of questions that kind of build off of each other. Maximum salary is still the $100,000 that they refer to on an annualized basis. So one of the questions being, can I raise my doctor's salary, or can I take care of my doctor? Up to that $100,000 limit is what they're limiting. So it'll be $8,333 a month, if I'm doing the math right today. But $100,000 on an annualized basis is what we can forgive. Now, make sure that was part of your overall calculation as well. So another question to kind of build off that same deal is, can I increase my employees' rate of pay to meet the 75% rule? So there's two rules. 75% is for the FTE count, in addition to how we spend the dollars. So we've got to get the 75% of our team back, including that, exception now. Of course, everything changes every day, but including that exception now, if you offer the job back, they now count. If you've documented that you've offered it and you have credentials and all that stuff and a documentation that they won't be coming back because of the COVID at this moment, then what we understand today is that you get credit for that. How you spend the money once you've met those rules, as long as 75% of the monies are used for payroll, then that's the other part of the rule. So yes, you can do that as well. One of the questions, and actually several of the questions that we're seeing or comments, is your employees are nervous. And we're going to touch on this a little bit more Friday, but I touch on it a little bit later in the presentation. I'm hearing this a lot, and I certainly can understand that. My wife is immune compromised, and speaking personally here, so I understand some of the nerves that are there, and I understand some of those concerns that all of us have to be mindful of with our team or respective communication. So as we're thinking through how we're communicating to our team, and this is non-PPP or IRS related, communication through this whole process is going to be key. What are we doing within the process to keep our area sterile? What are we doing for PPE? What are we doing for those COVID preventative measures, this new lifestyle, this new normal that we're going to be in up until that vaccine point? So making sure that constant communication, again, we'll touch on it a little bit later, will be key for that process. So one of the questions would be, I'm self-employed, so what would that look like? If you're self-employed, there's two questions here. Should I apply for the PPP money? speak with your banker. As of a day or two ago, most of the banks I've talked to, the PPP money has now been spent. But banks were typically allocated certain amounts, so that doesn't mean it's all gone. I haven't heard that officially, but the banks that I typically have worked with or have good relationships with do not have any more PPP funds to allocate at this time. So should you apply, it becomes a personal conversation. Whether you're applying for unemployment, whether you're applying or you have the cash flow, it truly becomes a personal decision on whether you should or should not apply. And think through that, because really, again, it was an employee purpose for you to have answered or funding in your pocket, so you didn't have to have so much lost wages, if you will. So as we work through these and just kind of scrolling through these, there is a partial forgiveness of the PPP loan. We are tracking, and there's a couple of them out there, but we at CLA, we have built a calculator. We are working with our teams and our clients to track those payroll cancellations and making sure that we're maximizing the spend. So if we don't get full benefit, there will be a pro rata portion, if you will, that we can think through. Another question similar to what we've answered already, can we wait and pay the 8 weeks at the end? Again, as we mentioned, the whole purpose of this is to get your employees back to work. So they'll be measuring the 75% FTE rule, and they'll be measuring the 75% of dollars. You know, so just think that in the back of your mind. You know, as we get further into this presentation, we talk cash flow, we talk the management of that process, and I'm going to go ahead and move forward a little bit. We'll come back to some of these here in a little bit, but I want to keep the presentation conversation going because I think there'll be more questions. But as you work through this process, remember, it's get your employees back to work loan purpose. The other thing to note, two things that we came out with for purposes of our internal conversations and conversations we're having with our doctors is, one, for those of you who have received PPP money, there is conversations right now about doing audits on those funds. They have not said what that's going to look like, how it's going to look. So we are suggesting to all of you, and we've helped many people with the PPP, is to engage your lawyer, right? To have those conversations and make sure you've done everything you can to document the process you did to lay off your employee or furlough the employee, terminate the employee, to bring them back, what conditions, all that good stuff, and then document the monies you receive versus how you're spending the money, and just make sure you're covered from a basis standpoint that way. The other thing, and Eddie actually brought this to my attention yesterday, is we're watching from a taxation standpoint. From day one, the whole purpose of the PPP money was intended to get your employees back to work under a grant program for your employees. Eddie, do you want to chat a little bit about the now you can't spend the expenses effectively?
Oh yeah, so the IRS, so initially in the CARES Act, it specifically stated that this would be excluded from gross income of the business in 2020. The IRS basically came out with their own slant on that on Friday, and they said, okay, it's not going to be included in the gross income, but we're also going to disallow you from the expense. So in effect, they've made it tax neutral. So and apparently some congressmen have came out and said that that's not what was intended. So we'll have to watch that space as to how that works. And in the case of some clients, it's several hundred thousand, or could be millions even in some cases. So it's a big deal that if you multiply that by the margin rate of tax of whatever, 35, 37%, it's a big number. So I think that one hasn't played out yet. The IRS came out with their notice. So right now, effectively, you reduce your deductible payroll by the grant that you get. So therefore, it's not kind of tax exempt now under the current ruling. But I imagine there's going to be more on that. But we'll see.
Thank you, Eddie. I appreciate that.
One other thing, Mike, just I think you mentioned there about getting the legal advice on the different pieces. The SBA/Treasury came out, I'm going to say it was a week ago now, approximately, whereby they said, and again, this is a reaction to the media stories of some of the companies, LA Lakers being one of them, that kind of said, where this story came out that a lot of big companies have got this money and should have been small businesses. And again, We won't speak to the individual circumstances of any of those stories, but as a result, the federal government came out with kind of a warning to effectively anybody who got the money, but it basically saying you certified that you were negatively impacted by COVID-19 and you need this money to support your operations. So they kind of came out and said that you need to be ready to substantiate that certification, which has spooked a lot of people, particularly people who have already got the money and have already spent a significant amount of that money paying their staff. So that is another area that if you're anyways wary of the fact that you have been impacted and that you certified that you were and you feel that maybe I wasn't as impacted as I thought, then I would definitely get your attorney involved, pull your CPA into the conversation as well, but have the attorney on that so that it's all attorney-client privilege or whatever. In most cases, I don't think it's going to be an issue to substantiate it, because most businesses are hurting right now, and particularly in the dental world, it's very, very easy. The business is shut. I mean, I don't think there's an issue there, but just a lot of clients have asked me about that in the last week, and they're pretty spooked by it. But to me, it's they're just reiterating what was already the initial thing. Were you impacted by COVID-19 across your business? Do you need this money? And have you no other liquidity in the business to support? That's the question.
Yeah, thanks, Eddie. I think that's really important. And I know we have another couple dozen questions that are still outstanding. A lot of them around PPP. We'll address those as we can. As we go through the rest of this conversation, we'll come back to some more there towards the end. I will say the treasury.gov website has a lot of FAQs around the PPP fund. So if we don't get to all these questions today, by all means, reach out to us individually. We're happy to work with you. Check out treasury.gov as well, as they have really good FAQ sheets that they have kept up to date real time as some of these legislations and changes have made and been happened. But kind of building into some of the rest of our presentation as well, you know, this is about cash flow preservation, and certainly PPP is of the utmost importance for cash flow preservation. As many of you applied for that as that, Savior, our office was closed. What are we going to do? How does this look? Who do we bring back? What if they don't want to come back? And we start working through that conversation. We put together this slide as an organization of looking at these key components within your business. You know, while you're shut down, this just doesn't mean this is a time just to sit back and take some time off or think about the money that you do or don't have at the moment. And this is really a time to strategize. And I will reiterate, communicate with your vendors, with Darby, with CareStack, with your CPA, with your advisors on an ongoing basis. But as we start thinking through these 4 buckets on strategy, operations, finance, and then of course patient experience, every one of these buckets, there are things to do beyond what we normally want to do. We all have, as business owners, a million things on our list, and we probably get 1 or 2 of them done at any given time. And we kind of make our way through trying to continue to grow and improve our practice. But as we break down and start thinking strategically, what is this going to look like? And we'll talk about a cash flow planning curve here in a minute, but what is this going to look like when we reopen? Am I going to need more PPE? I'm talking PPP so much. Are we going to need more PPE? Or is my team going to fully come back? Are they going to be comfortable? What's that communication look like? Have I been talking to my supplier and making sure I have a supply chain to get that equipment in the door? Do I need new equipment within my office to add safety? You know, from a software standpoint, is this the time? I know Jim and I were talking early on, this was the time that some folks were doing conversions on their practice management system in order to be ready and implement that. There's never a great time to stop your practice unless the world makes you do that. So thinking through some of these strategic things that you wanted to do. But on the strategy side, putting pricing of everything that goes through your P&L. And I will say the core of this, by the way, is getting your financials up to date. You know, I've been in this industry for almost 12 years now, and I look at about 30 businesses, 30 practices a month on average, and I have for the last 12 years. And what I have been amazed at seeing is most financials, on average, I'm going to say the vast majority of financials I see are more than 90 days old. What that tells me is there's not a real good pulse of any business or any business owner that we're working through. But this is a great time to build that system, build a process, and know your numbers better than you ever knew them before. So go line item by line item. What hits this line? What vendor is this? What does this work with? What do they work on? Why do I have this in place? And what do I need to do to improve it? Am I getting max value for this relationship? Look at your use of technology. Again, we're going to have to do some telemed or teledentistry, or we're going to have to do some patient follow-up experience. What are we doing in order to maximize for this future evolution that may go beyond the summer months that we're looking at today? Review pricing and talk about budgets. I love budgets. If you've seen me speak before, you know that. Operationally, all right, so what are we looking at when we check in a patient? Is that experience going to be the same? When we walk them to the back, is that experience going to be the same? Do we need 1 or 2 people to do that, or is it going to be a one-step process that walks the patient from check-in to check-out through the process and go from there? So when we start looking through these processes, looking at the operational flow, looking at the patient flow, what are we doing in order to maximize the structure? When we start setting dates on reopening, here in Texas, we have those dates. Many states across the nation have a date. You may feel that it may move, it may work through, or it may change. But what we've been telling folks, especially on the scheduling side, is schedule towards the date you know today. And this allows you to communicate with patients, communicate with your team, and start putting a plan in place to get there. If we find out that, we're supposed to open May 15th or May 18th, and all of a sudden it doesn't change, and we're sitting on May 16th and we haven't built a schedule next week, the likelihood of getting it full at the last minute or getting our team back at the last minute is going to be likelihood of low in order to be able to move that. So constant communication and work through your operations flow. Finance, and I know we've touched a lot on PPP. I know we've touched a lot on the funding, and I've seen some questions around the EIDL loan as well. What are we doing to make sure we have not only financials for now, but what is that cash flow impact beyond this? If we're going to need more equipment, our supply costs may go up just because of supply demand, or frankly, just additional usage of changing PPP equipment out between every patient or whatever that may be. What does that look like? So have we budgeted that out? Have we planned for it? Are we looking at our reimbursements, our revenue reimbursements, to change our fee schedule to capture that additional time that may happen? And then patient experience. This is all about our patients. This is all about their experience and what they want to accomplish. Just as you have some, and we've seen some of the questions that come through, just as you have some questions about your team not wanting to come back, you're going to have that same uncertainty with your patients. So what are we doing to assure them? What are we doing to get communication out to them of what we're doing? Sterilization. What are we doing on how their new check-in procedures? We got an email, speaking to personal experience, we got an email from our dentist. It was interesting. This is my 34th presentation in the last 4 weeks. So speaking to what a process should look like, and then seeing it executed with our dentist of saying, here's how you're going to check in. Here's what's going to happen when you get there. It was a great level of comfort for my wife, who, has an appointment coming up, but for her to see what the new process will be before she gets there is going to be comforting. But that kind of communication ahead of time, even though her schedule isn't for a month and a half, at this point, he's already getting out there and communicating to us of what that's going to look like to all his patients. So consider that through this process. Anything you want to add there, Eddie?
No, I think you've covered pretty much all of it, Mike. I mean, as you said, the patient experience is going to be vital. And I know from talking to some dentists, even the doctor experience is different, because even with the PPE and the amount of additional masks, they're being extra careful. They're finding it actually a little bit clunky, and some procedures are taking slightly longer than what without it. But these are all things that you kind of almost need to consider from a scheduling point of view as well. If things are going to take a slight bit longer, maybe that's just 5 minutes, but it still adds up in a day. So there's going to be an awful lot of stuff, I think, over the next week or two that people are going to realize, and things like waiting room as well, Mike.
Yep.
How do you do the social distancing in the waiting room? You've obviously got to keep the chairs apart. There's all these things. I know Texas has opened up very slightly at the weekend, and I noticed just going into even a takeaway, they've got circles on the ground whereby don't step any closer than this. But there's going to be lots of things like that, interesting things. So.
Yeah.
But they're all vital, because right now everybody is a little bit spooked, and you have to try and make everybody feel it's safer.
Yeah, absolutely. So as we start thinking through, make sure I get my slide over here again. As we start thinking the cash flow impact of this, and understanding what is your impact going to be to your business. I'm going to show on the next screen, or the next couple of screens, if you will, just this thought process as a visualization. You know, many of us went to emergency care only, and maybe that represented 10% of your patients, maybe it was 20, maybe it was much less, and in some cases I've seen practices completely go to zero. But, you know, the bigger questions we need to answer as we start thinking through our key performance indicators is how long are we going to be closed? If we close in mid-March and we're going to be closed till the end of May, you know, what will that look like? Will there be this recapture? Will there be this point where we have a rush of patients wanting to come back immediately, and we need to expand hours, expand days, and schedule all that good stuff? Again, things we'll touch on a little bit more on Friday. But when we start thinking through this, many practices that I see are really positioned for about 1.5 to 2 months of expenses within their cash flow. And then maybe they have a line of credit available, maybe have some personal savings. But this is one of those impacts that could go on 6 months, not only at 100% of production, but also just on when things come back to normal. You know, are we at 80% of what we used to be? Are we at 70? Are we at 60? You know, some of the early indications of some practices I've seen, and certainly in following some of the Asian practices, Asian community, if you will, in Asia, because they had this big pent-up demand, and then their schedule started falling apart as they looked 3 weeks out to a significant drop from that patient flow. So being prepared for that, you know, information, being prepared for that business model is going to be something that you really got to think through. You've stressed the financial performance. You know, this is something that, you know, we always think of P&L, we always think of EBITDA, but, you know, that balance sheet position, the financial statement, the report that's the most important to you is cash, accounts receivable, AP. What does that look like? And, you know, how do we work through that? So some of the things that we've talked to, and you may have seen this report before from us, but it's what are we doing right now to communicate and preserve cash? You know, have we reduced our spending at the moment? Have we talked to our suppliers? Don't just cut people off. This is one I'll continue to reiterate. Don't just cut folks off and say, I'm just not going to call the landlord back, or I'm not going to call my Darby rep back. Have a conversation with the reps, right? Have a conversation with your vendors, your suppliers, CPA, your lawyer, whatever it may be, and say, hey, here's what's going on right now. We all know. Here's what I'm working towards. Here's what I'd like to do on a payment plan, or this is something I'd like to work out, because if you're wanting to keep those relationships and keep them strong towards the tail end of that, it's going to be vital that we have a good relationship now going through that process. So, you know, remember that, but talk about your hiring delays. I know a lot of questions are, I have PPP money or I don't have PPP money. When do I bring my team members back? You know, I want to maximize the forgiveness of this PPP money as much as the next person. I will say that. The big thing is I also want to preserve cash. So when I run budgets, when I run forecasts, and when I work through all this with our clients, we're really saying, okay, what money do we need today in order to maximize this forgiveness, but also what do we need today in order to be here 6 months from now and still be in a salvageable place? I know one of the questions that came in is, what happens if I bring my employees back and we still aren't open, or the demand decreases? What do I do then? Well, we don't know if there's going to be another bailout in the fall. We don't know. We have to anticipate there won't be, because as business owners, we always have to be prepared for the worst. But, you know, you have to think through those questions. It's a great question. None of us have a crystal ball, but you really have to preserve cash and think through this. So think about reduction of discretionary benefits. I've had conversations where 401ks have gone away. Benefits may have scaled back respectively of what was being offered. And benefits, I'm not just speaking health insurance, because most people aren't wanting to touch that, but I'm thinking, you know, we did working lunches on Fridays. We ordered breakfast every day, the soft things. We did our annual holiday party. I mean, all those soft costs, Friday unlimited sodas. We pay for everybody's laundry. I mean, those benefits beyond just your typical health insurance deal, you have to think through as you're going through every line item piece. Is this salvageable 6 months from now if we don't know what the future looks like? You know, as we start looking at rent and debt payment deferrals, have you spoken to your landlord? Have you spoken to your bank about doing a 90-day deferral? Make sure when you're doing that deferral, it is truly a deferral and a re-amortization of the cost. And if it's a rent, ask them to add the rent to the back end of the lease, but don't have a 90-day balloon payment where after 90 days, at 91 days, you have 3 months of payments due at once. And I have seen that. So be careful and be mindful when you're having those discussions. COVID expenses. Are there things like you're pre-ordering, you're talking to your reps, and we're saying, okay, we need additional PPP, we need this piece of equipment. There are COVID-related expenses that even though we've shut down, we're still working with our clients on a day-to-day basis on strategy and all that kind of stuff. So we're having a lot of conversations. So we're part of that expense, but we're needed and necessary. So just making sure we're working through all that. So as we start looking through some of these additional questions, I go to this planning curve that I was mentioning a bit ago, and chatting through, is we have to think about this COVID surge. Now, this is just a picture. We don't know what the old baseline will be. We don't know what the new COVID surge will be or the recapture, but the visualization is to get you thinking from its normal trend line, the old baseline as we call it. Where is your revenue going to be as you move through the rest of the year, the next 12 months, the next 18 months? And how does that look as you relate to putting your business together? So I know we have a few more questions coming along, Eddie. You want to flip
Mike,
back to that,
where do you want to tackle here? Like, we've got 22 queued up, but I think some of them we've already.
I could take a few of them quickly.
Yeah,
okay,
go for it.
Start from the start. Maximum salary, Mike already mentioned, it's 100,000 annualized, which 8 weeks is $15,834, I think. Just received PPP. Can this money be paid back in April rent or only pay for the next 8 weeks rents which are due? My reading of it is that it speaks to rent paid under a lease, the terms of a lease, because some people have asked me, what about prepaying the rent? The SBA have promised us guidance on the forgiveness. We still haven't got it. It hasn't been released, and I've heard different things about it. For now, I would assume that it's just 2 months rent, but you'd have to pay it, if you will. But again, there may be possibilities for prepayment, but I'd be surprised if they allowed it, because otherwise, And
it really just gets to the 25% limitation is really what it gets into: rent, utilities, interest. So that's where you'll be limited most.
Can I hire a part-time employees, a full-time? Yes, well, the FTEs will work to, FTEs typically you'll take your part-time employees under 30 hours and you'll divide it by 30 hours to get to that number, and then it's compared to last year's equivalent. So if you do take a part-time and make it a full-time, it's actually going to help in that regard, and presumably you're going to be paying them more as well, so therefore it's going to be an increase. So nothing wrong with that. Can I hire a different new employee to replace a previous? Yes, you can hire and fire within it as long as you maintain your headcount. Can you increase your employee headcount? Absolutely. The more, the better. That's what everybody wants. The next question, there's a discussion that as long as you return your employees to work prior to June 30th, there'll be total forgiveness without discounting for change in pay or FT. No, I would say, okay, I'll caveat that by saying that we have not got the forgiveness guidance, so we're not sure. I've heard various rumors, but I haven't heard that one. So I would say no. Is there a number of employees that needs to be hired back as compared to the number I had before? There's a metric whereby you have to compare from February 15, 2020 to June 30th, 2020, and then compare it to the equivalent period in 2019. Now there are different, that's the standard. Then there's, if you're a seasonal business, there's another way you can adjust it. If you're a new business started this year, again, it's compared to, I think, the January period, February period. And the employees have to have been employed at February 15, 2020. So there's all these different pieces to it. But it is compared to last year, effectively.
Hey, Eddie, come up for air, man.
Yeah, he's doing great. He's flying.
Oh my God, you're gonna win a contest there. Well, but I want to be mindful of the time. Yeah, I want to be mindful of time, and maybe it's not. I give you guys a little bit of artistic license here. Maybe it makes sense to, bring some summary thoughts, and then go back and maybe handpick some of these questions, because we're not going to keep up. It's like whack-a-mole. As you knock one down, 3 more pop up. So
yeah, Eddie's doing great, and honestly, we're towards the tail end of our presentation. I know we only have a few minutes left, so we want to respect all the time. But one of the things, and I'll leave this as Eddie continues to go through these conversations. I'll leave this one. It's just some immediate. I always like to have a call to action with our clients. We always have that call to action. So this is kind of a summary of, calls you need to make now. Call each one of your vendors, talk to your landlord, talk to your banker, and talk to your team consistently. I can't tell you how many times I'm having conversations with my doctors, and they haven't talked to their doctors in weeks. They haven't talked to their lead managers. They haven't talked to their staff in weeks. And that's just not a good precedent. You know, your team wants to hear from you. Your vendors want to hear from you. You know, we as Eddie and CLA and all of ours and all those that we work with, we're bending over backwards with those clients that are working with us and communicating to us, even if they have to defer our payments as well for a short period of time, because they're communicating on a regular basis. So I think that's key to the conversation, is make sure you're having those conversations, because we could be a valuable part of the team. Darby and CareStack, we all be a valuable part of your team, but do that as we work through. I always say build your team, and then just a special thank you. So we'll fly through just a handful more of these questions as we got 2 minutes left, and make sure we have, you know, everything else. But Eddie was doing such a great thing. I think we may let him just keep growing.
Okay.
Go ahead, Eddie.
Take a breath, Eddie. Take a breath.
Okay. The one here, if an employee moved to another state, she quit, well, obviously you can rehire somebody else.
Yeah, it isn't about the employee name, it's the number of people. So
Yep.
FTEs on that one.
Yeah. Is 401k profit sharing part of payroll costs? No, payroll costs are the gross salaries, the health insurance, and the just a small portion of the state and local employer taxes. So that'll be in Texas, that would be the SUTA. Different states will have different state and local taxes. How do I pay myself from PPP if I'm an LLC? Effectively, the application is similar. It will go to your net earnings on your Schedule C. I presume you mean an LLC taxed as a Schedule C disregarded entity in your tax returns. So you'll take your net earnings on your tax return on your Schedule C, divided by 12, multiplied by 2.5, and that's what's covered. If you have employees then as well, salaries, then that's added to that as well. But you yourself are counted by virtue of the fact of your net earnings. Is the PPP payroll amount calculation by gross or net? It's gross, and it's as defined. That was actually an issue initially, and they defined that specifically. Can we pay our employees in advance to meet 75%? Yes, you can, but it's subject to the $15,834 over the 8-week period per employee. So you can't pay more than that to an employee. But I'd also balance, like Mike spoke to a lot of the operational side. I mean, I'm talking more of the methodology of it. But if you start paying your employees a big salary, you'd be surprised how hard it's going to be to reduce them down in 8 weeks' time. So you got to think about that too, because there is a morale issue here as well. Is the forgiveness based? Yeah, sorry, Mike.
No, y'all have you answered one more question, and I'll answer one more question on the IDLE, because there's a few questions on IDLE and we didn't touch that, and then we'll call it a day.
Okay, I go on one more then. Is the forgiveness based on meeting 75/25 of the entire amount, or is it based on the amount that is spent and the remainder turns into a loan? The latter. It depends on what is spent. And obviously 75% of it has to be on payroll costs. You can spend 100% on payroll costs and get full forgiveness, but at least 75%. And then if you don't spend it all in terms of that, and that's subject to the $15,834 per employee, yes, the remainder turns into a loan, which is what we spoke about. And that's a 2-year loan with payments deferred, I think, for 6 months.
Yeah. And on the IDLE loan, there's a few questions on IDLE, so I want to make sure we touch on that. You know, for if you are one of the few that got the IDLE loan, that was when we looked at the first round of PPP, there was $350 billion given to that. On the IDLE, it was $10 billion. So what was supposed to actually be a bigger loan program, meaning 6 months of operating expenses, true loan under good terms, all that good stuff. They also had a grant portion where you received up to $10,000 or $1,000 per employee. That grant portion, there is, at this time, there is no specific purpose for what you have to use it for, you know, for that grant purpose. There's early conversations that it was going to roll into your PPP money, but I do have some clients that receive both. So at that point, we don't see any restrictions as it comes out now, but continue to monitor that situation as the rules keep changing, as we referred to. For purpose of the IDLE loan, it doesn't have the same qualifications of payroll, rent, utilities. interest as it did. It was meant for everything, for purposes, if you receive the EIDL loan and not the PPP money, then the purpose of the loan was built off of 6 months of operating expenses, and you can utilize it for operations. So there is no further purpose for that or restriction, since it is a true loan on that. But with that, I know there were several other questions related to PPP. By all means, I've left our contact information on the screen. We're happy to chat with you or even help you do an assessment within your practice. Darby and CareStack, they're doing this is the first of 3-part series, so tune in tomorrow.
Or actually, Mike, don't undersell us here.
Yes. I'm sorry.
Can you advance?
4-part series.
Yeah. Do you have that slide in there by any chance for the next program? But I don't.
I don't. I apologize. I just realized
Okay.
I do not. So
I wonder if I can bring it up here. If you can make me the co-presenter, because I just want to basically go.
Absolutely.
I'll talk about what's upcoming here, and so give me 1 second. So for everyone, just in terms of what's continuing, so thank you, Mike and Eddie. This is tremendous information. Yeah. You have their contact information. Tomorrow, we're going to have a program hosted by OSAP and on infection control guidelines for reopening. Jeff, I don't mean to put you on the spot, but any more commentary you want to add on this program? For those who are registered and may want to learn a little bit more, it's going to be at the same time tomorrow, 1 o'clock Eastern.
Sure, absolutely. Yeah, so we've got a great speaker lined up for us for tomorrow's OSEP training on infection control guidelines, and he's going to present some real-world practical tips on how to implement, some of the guidance that's coming from the ADA and the CDC into, real-world scenarios that clinicians may see as they reopen their practices.
So you can find information in the email that you received from Darby or CareStack. You can register for all 4 of these programs. So today, tomorrow, Friday, then we take a little bit of a break so you guys can, Eddie needs to catch his breath. Then we're going to come back next Thursday for a program as well. The recorded session for today will be available, I've confirmed this, both on the Darby and CareStack websites. So if you want to get this recorded session to go through it and watch it in a more slow, deliberate manner, I would check back on both websites probably tomorrow by this time. So thank you very much for everyone for sharing your time with us today. We really appreciate it. And I realized I didn't share my screen with you, so that was pretty stupid. So let me go ahead and just show you what I'm talking about. This is the registration form. And going back to the actual program itself, these are the different, someone next time point that out to me that I'm totally, spazzing out here. I'm sorry about that. But here's the program that you're looking at. Just going to scroll down here for a moment. Tomorrow's infection control. And then Mike and Eddie will be back along with Dan Traub from Method USA on Friday to anticipating tomorrow's challenges, managing cash flow and supply chains as your practice reopens.
Thanks, everybody. We'll see you Friday and see you tomorrow for the rest of the presentation. I like it. Have a great day.
Take care, everyone. Thank you very much.
Appreciate it.
Very much, everybody.
Bye-bye.